My name is Jarrett with Profitable Properties Boston. I own 50 plus cash flowing properties in the greater Boston area. And these videos are to be able to help educate you guys so you guys know every aspect of owning an investment property and what to look out for. In this video, I'm going to be covering insurance. Insurance, a lot of people, it's like going to the dentist. You don't really want to go and you only need it because it's required, or nobody really enjoys insurance. But it is so important to have the right coverages, the right insurance agent, and to be able to ensure you understand what you're getting. Because right now it is what they call a hard market for insurance. And what that means is it's really competitive out there in the sense that a lot of carriers are increasing their prices. The reason why is cost of materials are going up, cost of labor is going up. And there's been some disastrous type of losses like hurricanes and floods across the US and fires. And what it's doing is across the board, it means that the insurance companies have to increase their premiums to be able to offset these losses, as well as the chances that it's going to occur in your town or city. So I'm going to go through in today's video explaining in real time and showing a comparison of a quote that I received from my insurance agent. Even though I am a licensed insurance agent myself, I am going to be reviewing in depth, line by line, the insurance policy that was quoted out to me. So let's jump right into it. So Titan Insurance quoted this out for me, package policy. So what they did was I got a copy of the policy from the current owner and another quote from him. And usually I'll ask for at least 2 or 3 other quotes. It really depends on making sure that you have things like the coverage. So this is the carrier. Building limits. So the limits that they're going to insure each building up to, many companies will require each year that building limit go up because the valuation of the property goes up. Again, even inflationary, 3% can be a significant amount. You don't want to be underinsured in case you have a massive loss and the whole thing burns down. There's 2 buildings here, so they separate that all out. And they're going to have the saying is an all-in policy, as in it covers things inside the units as well as the exterior of it. And it has an inflation guard. Remember, I was telling you about that. So in policy, it's 6%. This one's 4%. And in this one, it's the valuation of it. It's going to be 100% replacement cost, which is great. So if things do need to be replaced, it is the actual cost to replace it, not the depreciated amount. What I mean by that is, like, let's say I lost this t-shirt or it got stolen and I bought it for $50. What would end up happening is they would give me $50 to go out and buy a new one. If it wasn't 100% and it was just the depreciated value of it, this t-shirt might be worth $5. And then I have to cover that difference between $45 and $50. There's not going to be any contents here because it's going to be the tenants. We do require our tenants to get apartment insurance, and it's always highly suggested you do that as well. And the next thing is going to be a deductible. So the way the deductible works is that, let's say there's a loss, $50,000 again. The first $10,000 is going to be paid by us, or paid out of the payout of the $50,000. So the higher the deductible, the lower the premium typically. Right? So if you have a $2,500 deductible, it's less, you're going to have a higher premium. It's a higher chance that you're going to make a claim with that amount because you are paying, say, $10,000 instead of $2,000, and you're paying a greater portion of that loss. So it might have things that are included or not included. So this is like a named storm. So storms, there are hurricanes that are named. We're going to have water, wind, ice dams. We're going to have business income. So business income in the sense of loss of rents is going to be in the sense of, hey, we've actually lost $100,000 in rent because all the tenants had to move out, and that they're going to have loss sustained rather than a capped limit. That's really good if it's a massive, massive loss and we have to rebuild the entire property. And they're going to have water backup and different amounts. So in this case, it's only $10,000 for this policy. This one's for $25,000. They're going to have whether there's going to be an earthquake or a flood. Neither of them have that. You're going to have EPLI, right? Higher non-auto, cyber, right? So all these different aspects, I'm not going to go into exact detail on every single coverage. You should speak to your insurance agent to determine if you want it. You can also DM me and I can go into these in more detail. And then you're going to have ordinance and law, right? So there's going to just be undamaged portions of the property, demolition that's going to be required as a result of this ordinance and law. And then you're going to have premises liabilities. So this is important in the sense that you're going to have liability coverage of $1 million for this policy, $2 million for this policy. And what it means is the total amount. This is per occurrence and total aggregate. So this is 2 million, 4 million. So it's twice as much. So what'll end up happening, and these are obviously included within it. He'll compare it out to me and say, this is the policy at 19,287. This one's 17,980. And I'm going to decide if these additional increases in coverage are worth that additional amount. Then you're going to give me different options, such as a commercial umbrella, how much it might be, and other aspects that we might want to cover. So again, it's really nice to be able to have an insurance agent quote out both the current policy, see what you got, explaining it, and then your potential other policy to see if there's any savings or increased coverages, because there is perhaps on your policy gaps or issues that are there that won't cover you. I've seen a lot of landlords have a loss, not be covered because they didn't have the right type of policy. So you want to do this up front. I review my insurance policies every year with my insurance agent to see if there's anything that I should be aware of. He also needs to know any changes in my business, as well as the things that worry me, right? So this one is held in an LLC, right? Other policies might be held personally. If you're held personally, you might want personal umbrellas. These are all things a great insurance agent would do. But if you are buying investment properties, you want to have an insurance agent that understands about insurance. Obviously, it's really important to be able to have a real estate agent or a property manager who also can talk the talk. That adds value as well. So if you have any questions, again, about the insurance, I can put you in touch with specialists. I can try to help it out with myself. And I look forward to helping you with your next investment property deal and making sure that you're protected each step of the way in the purchase through management and profitability.